Today we've got Diana Schwartz, and she is a down payment assistance expert. So I've got a whole bunch of questions for her. We're going to go over exactly what these down payment assistance programs are, how they work, and do a little bit of myth busting because a lot of people think they don't qualify, but they actually do. So let's just jump right in. So, Diana, thank you so much for joining me today. What's one of the surprises that most people find with down payment assistance programs?
Well, one of the surprises is they either don't know it's available or they think they can qualify and they don't realize that they cannot. So the programs are very new ones. So someone might think that they qualify, but they don't. They don't realize that income is a factor, and then again, they don't. People sometimes aren't aware that there is a program that can help them. Um,
Yeah, I hear that a lot. And what do you think the biggest mistake is that people make before they talk to you about getting a loan, getting the assistance that they may need?
I think one of the biggest areas is the preparation. Um, Coming to a lender at least 6 months ahead of time to see what's available, see what they need to do in order to qualify. Maybe they need to take a look at their credit picture. Maybe they need to determine how much they need to in assets, either for the down payment, the closing cost, or reserves. That
I
would
see.
be, yeah.
Well, how important is credit for getting into this process?
If I cannot think of a more important item to get a loan. Credit is one of the C's of qualifying. Credit shows a lender what your history has been to be able to manage to pay a loan. They use that factor to determine whether you're going to be a good candidate to pay back their loan. So credit is a very, very important factor.
A lot of people ask me, is there some kind of baseline? Is there does your score have to be a certain number before you could move forward with any kind of home purchase?
So, there are some lenders out there, if you're talking about scores that will go down to a 500 score. And I've successfully done a couple loans that were actually successes for a firefighter who had a 505 score and another individual who was handling an estate a refinance, and they had a 565 score. The goal, though, is really to get the scores above 680 and higher because you're going to be paying a higher down payment. Your interest rate is definitely going to be affected. So even though you can get a loan, and there's some other factors involved as well, with a lower score, lower than 600, lower than 580, you're going to be paying for it.
Well, if I've got a low score, what should I do next? Do I need to talk to you to get a plan, or what do I need to do to get that score up?
So I definitely recommend that if you're thinking about purchasing a home and you've got a low score, is to go to a lender and have them do what they call is a soft pull. A soft pull will give the lender an idea of just what your profile looks like. Why is your credit score so low? On the side note, the soft pull isn't going to impact your credit. So it's kind of a safe way to get started. And the the lender will be able to take a look at that profile and say, well, is it because you're using too much of your credit line or debt utilization, as they call it? If it's something like that, such an easy fix to get your credit score higher. Just make sure you pay down those limits under 50%. And I've seen increases of 30 to 40 points within 30 days. Now, if we're talking about items like late payments, then you've got a little bit harder situation because late payments need time to separate yourself from when that late payment happened. Some programs, if you've had a late payment in the last 12 months, it just makes it very difficult to get a loan. If you've had other items, like charge-offs, collections, then you're going to really need to take a look and maybe plan for 12 months out. But definitely, it's just valuable to do that soft pull to take a look at your credit profile.
I think that's really important, Diana, because as a realtor, I see people very hesitant to talk to lenders sometimes because they believe that when you check their credit score, it's that their score is going to take a hit. And that's where that soft pull comes in, where it doesn't affect the score at all. Is that correct?
It doesn't. I mean, that's what companies, if they're wanting to give you a credit offer, they do on the back end. They do a soft pull, so it's not an inquiry. And little by little, I think a lot of loan originators recognize how great a tool soft pulls were to be able to help a consumer to get into a home. Some lenders have taken a longer view in incorporating access to soft pulls. But most lenders now do have the capability to provide a soft pull. And on a soft pull, most often you're going to see one or two of the credit agency's scores. Um, but that gives you just a good benchmark to see just where your scores actually are, and it definitely gives you your credit history of the different vendors that you've had. I mean, there's also another program, the annual credit report, WW annual credit report, that is the only free credit report program officiated by the federal government where you can download yourself to take a look at the three different agencies to see if you have any payments that you weren't even aware of. So that's some little homework that you can do on your own before you go and talk to a lender.
Well, I'm so glad you brought that up because that was my next question. Because, we need to be able to check our score in a safe way. And could you repeat that address again, please?
Yeah, it's www.annualcreditreport.com.
Awesome. That's
And
easy to remember.
yeah,
Why is it that we should meet with a lender early on? You mentioned before that you ought to start talking about 6 months before you start going shopping for a house. So why is that so important?
I think, for planning, that it gives you an idea. Number one is your credit. Are you ready to get pre-approved? Maybe you're not ready to get pre-approved and you need that time to pay off some of those debts. Also gives you some time to determine where do I want to live? Do I have also enough, do I have enough reserves and monies? Because even if you're applying for down payment assistance, that doesn't mean that you don't have any other costs, because there are costs and they're going to be coming out of your pocket. So if you're planning to purchase a home, I mean, that's a big event. You want to plan for it. You want to look into the future and get there. You'll have to start thinking about furniture and what you're taking. So a lot of that takes time.
You're right. A lot of times I see people who they know what their down payment's going to be, but then may not know about these additional costs for closing or for inspections or a survey or, appraisal. There's a lot of little things that add up, and we definitely don't want to see people getting towards the end of the process and find out that they're short on cash because that causes a lot of stress for everybody. So that's something that between you and someone like me, a realtor, can help put together a plan of action so that you make sure you have enough cash on hand to be able to do the transaction, still have plenty of money to pay the mover and get moved in and have a little bit of a cushion. What about reserves? Is that something that you look into as a lender?
Well, reserves are there. There are a couple of different areas. Now, there's some loan programs that require you to have reserves for maybe 6 months um, of the mortgage payment, required you to have the reserves there. So in case something happens, the lender knows that you'll be able to pay that mortgage for the next 6 months. Um, some of the down payment programs may require that. So that's one reason for having reserves. The other area is where you look into the future and do you have reserves in case for the maintenance of the house? You're not going to be able to pick up the phone and call the landlord to ask them to fix the plumbing or if something goes wrong. So you want to plan also for reserves in the future.
That's a good idea. I think that's good advice just all around to have reserves, and it's particularly important here. So we need to have a pre-approval because you really can't go shopping for a house without a pre-approval because that kind of sets what your price range is going to be so that you know what you can look at comfortably. And also, we can't put in an offer on a house without a pre-approval because
Yeah.
when a seller gets an offer with no pre-approval or any proof of funds, they're not going to take it seriously and they'd be a fool to sign it, to be honest. So we're getting all organized. We're getting our stuff together. We're talking to you in advance, getting a plan of action. Then let's talk about the programs. So what exactly are down payment assistance programs?
So down payment assistance programs are essentially another mortgage on your house, a second mortgage, or they can be possibly a grant. It's a second source of income. I'm sorry, second source of monies that will that are available. That's number one. And there are quasi government agencies that provide them, agencies like the Housing Finance Authority, which are created to provide down payment assistance and affordable lending to communities. There are also individual cities and locations and counties that provide monies for down payment assistance. So down payment assistance is a second mortgage generally, or it could be a grant, and it's considered a lien also again on your property.
Well, I'm glad you bring that up because they're, like you said, there are grants where it's just they're giving you money, and then there are ones that have to be paid back at some point in time. Could you kind of expand on that a little bit, how those differ, and the ones that you do have to pay back at some time in the future, how those work?
Yes, and they're different. So depend, different programs have different plans. So a lot of the down payment programs are given to the buyer as a 0% deferred program, which means that if they're giving you $10,000, there's no interest, it's accumulating on that. And at the same time, the payment's deferred, so you're not making any payments. However, when you go to sell the property, or if you refinance the property, or if you turn that property into a rental because this is supposed to be a primary home, then you do have to pay that money back. So something that definitely needs to be paid attention to. There are other programs and there are different reasons that you have to pay back in 5 years. That's when the payment starts. Uh, Also still 0%. So basically they just take the payment due and divide it by the 100 and 10 years, and then that would be your monthly payment. Or there's some programs that are you have to pay back right away. Um, and that's, they'll give you the money to close on the house. You'll have the funds to close. However, you want to make sure that you have the income to be able to start making that payment as well.
So it sounds to me like there's all these different programs. They've all got different rules. It's really, really complicated. And you'd really have to specialize that and be a real expert in these things to make sense of all of this.
This is so true. And whenever I teach the first time home buyer classes, that's one of the items that I say. I said, work with a lender that has experience in down payment programs, because they are nuanced. And if you're looking to have a smooth and seamless closing and make your realtor happy, then you definitely want to work with a lender that has experience with the down payment programs.
Oh, I can tell you that's for sure. And so, so you're telling me that not all lenders know about this stuff.
Some lenders prefer not to work in that niche, if I should say that,
Yeah.
for different reasons. That's it's a niche. So they prefer to work in other areas. But if you are working in the first time home buyer, the down payment world, that it's considered a niche.
Yeah, you're
So
right. And one thing I've seen a lot in my business is that people assume that all the lenders are the same, but you're right. Many lenders specialize in certain kinds of properties, certain kinds of loans. In your case, you specialize in these kind of things, but they're not all the same. And sometimes your realtor will recommend a lender specifically for that reason because they're going to suit exactly what your circumstances are and have a lot of knowledge about people just like you. So what are the biggest misconceptions about these programs that you see out there?
Um, some feel some misconceptions are that they're available for everybody, and if you're making 200,000 a year, you're most likely not going to qualify for a down payment program because it is geared to for affordability reasons, to help people to get into a house. And it's understood. You're a first time home buyer, but you do make a lot of money, but you still want to. You're still for a first time home buyer, so you want to see what you can qualify for. So that's one of the misconceptions. The other misconception, and this is on many sides, is the time that it takes. Some of the programs are underwritten just by one underwriter, the first and the second mortgage, and those are usually follow the standard closing time of 30 days. But some programs are underwritten by the separate entity that's offering them, and so that entails the coordination of the first mortgage and the second mortgage underwriting, and they have their own needs, so they might require 60 days for closing. So these are this is a preparation of making sure what's going to work for everybody.
I'm glad you bring that up, Diana, because a, a lot of the clients that we have come in, they think that, okay, this may take a little bit longer because there's a program involved. Is that going to put me in a big disadvantage when we're putting an offer in? And I can tell you that the timing is right because we're in a little bit of a buyer's market right now. So sellers are a lot more likely to make concessions and allow for a longer time to close if necessary. And we'll talk about the concessions in more detail in a minute. But I can tell you that what we're seeing out there on the street, especially here in Florida, is sellers are willing to make concessions. They're willing to help a buyer out because they really want to sell their property. And there's just not as many buyers out there right now as what we've been used to in the recent past.
And it's so true. I mean, I actually have a situation right now. It's amazing because it came back that the down payment agency wanted 60 days. We'd asked for 45 days, which is something I standardly do, for, down payment. But this particular agency came back and the seller worked with that,
Mhm.
which was so it was for the market that they did that.
Yeah, we see that a lot. In fact, once somebody's under contract, they've got a buyer, they're they're already kind of moving out and making their plans to get out. They've figured out where they're going to spend that money. And if it just needs a couple extra weeks, I can't think of a single instance where the seller has just said, no, we're not waiting any longer. We're going to start the whole process over with somebody else. So
That's so true. Yeah.
that's a really good point that you brought up, Diana. So who exactly qualifies for these kind of programs? Is it just for people with really low income?
So not necessarily, the depending on the program and the area median income, as they call it, can go up to 140%. And I don't have those numbers here. I should really pull them up just to give some context.
Well, I'm sure they
Um,
vary from area to area.
but and it depends on the program too. So but a lot of a lot of programs are geared for the affordability side. So and yeah, as a lot of people within the correct income limits. And some programs, and then also the first time home buyer qualification. Believe it or not, there are programs out there and certain exemptions that don't require one to be a first time home buyer. And a first time home buyer is defined as somebody who has not owned a primary home for the last 3 years. Sometimes it's a home itself, but that's generally the definition. But we have a program right here in our locale, Pinellas County, and you don't have to be a first time home buyer for that program. The other qualification with some of the programs, the with what they call the HFA programs or the Florida Housing Finance programs like the Hometown Heroes. If you're a veteran, you don't have that there's an exemption for you to be a first-time home buyer. And if you purchase in what they call federally designated areas, and so those are particular census tracts where they want people to buy, that exemption's removed as well.
Yeah, that's true. We've seen a lot of ones that, of course, they're not all geographically specific, but some of them are because, the local government wants to get more people living in certain areas and start to develop that area. And there's just so many different variables. And I think that's one thing that's such a misconception is, first of all, that you don't have to be a first time ever home buyer. And like you said, if you haven't purchased a home as your primary residence in more than 3 years, that qualifies you as a first time home buyer. And
Mm-hmm.
I didn't know that there are even programs that didn't have that requirement at all. So I'm really glad you brought that up.
It's great information. And then once again, it's, working with a lender that can get into the different nuances and be able to help the community.
So it sounds like it's very specific to the individual.
It is.
So
There's some programs that, and a number of them count household income. And there's some programs where they'll just use who's ever the borrower, not necessarily the household income. So it is specific.
Hmm. So, what's the biggest advantage for using these programs?
I think leverage, it gives you an opportunity to get into a home with lesser use of resources. So I think leverage is one of the main advantages, and plus it does give an opportunity, to create generational wealth, to create home ownership for many. Um, and I've always enjoyed too, just on as an aside, with some of the closings that I've had where people were using down payment assistance, and for them, I remember this one buyer. He came in with a $12.12 cashier check, and that was what was due at closing. So, and he was
Wow.
using down payment assistance. That was a really sweet story. And they're being able to get into homes with limited funds needed.
I know. And it's just, it really warms my heart when I see people who are able to get into their home, a home that they own, knowing that it's the best financial decision of their life. And down the road, that's going to continue to increase in value. And one thing that is interesting is real estate always goes up in value over time. Now, it's going to have little ups and downs along the way, but if you look at a 10-year span of time, it's always up all through history, and we don't expect that to change. So it is a way to get generational wealth, and probably the best way and the most common way. I know in my family's case, my parents' home provided a little bit of equity to us kids after they passed, and that's something that passed on to the next generation and helped us out.
Yeah, it's great. It's a great factor of it.
So speaking of families,
Mhm.
sometimes families want to help out and provide some funds. So how does that fit into this whole picture if you have a family member or a friend who wants to help?
Yeah, gift funds, are what they're known as, and some families love giving, especially grandfather to a granddaughter. They love to help out, and gift funds can be a very big help to with the down payment and the closing cost. There's a form that both the donor and the borrower will have to sign, that shows where the funds are coming from the donor, their bank account, and also stating that the buyer does not have to repay those funds. So that's a lender document if you have gift funds. Um, there's also something else called gift of equity, but I won't get into that right now. The one piece on gift funds, though, is due to the IRS. The donor would really want to talk to their tax advisor. I think the amount is now 17,500, but believe it or not, the IRS does not allow one to just gift as much as they want to somebody else.
Sure, there's a
They'll
limit.
There's a limit. So, because then they're going to start taxing you for, transferring your funds out of your estate into somebody else. So that's definitely a consideration for some people. They want to take a look at what the gift tax might be.
Yes, yes. Well, I'm glad you brought that up because, fortunately, every once in a while somebody has the means to help and wants to help, and that really helps people out a lot. And
But
it makes sense. The lender wants to know what's going on with that,
Mhm.
just because they want to know that somebody isn't going to be strapped making payments to some other third party.
Right, yes, they want to have that disclosed and be transparent, and they also want to know where the money's coming from.
Hmm.
just following the money too. So,
Well, while we're talking about, ways to help out financially, I'd like to explain a little bit about how seller credits work, because sometimes the seller of the
mhm.
property is actually willing to help. So I'll give you an example. Uh, the seller may agree on a certain purchase price and then agree to credit the buyer back a certain percentage of the sale price. Now, of course, there's limits to how much they can do, and it varies, but that can go towards closing costs, and that's a big help to a lot of people. And that's where having a really great realtor who knows about these programs and is accustomed to negotiating these kind of things. And of course, I'd prefer you hire me, but if you need somebody that's outside the area that we service here, my wife Pat and I know people all over the state of Florida and even all over the country that are familiar with these kind of things that we can recommend to you and introduce you to them so that you'll know you're in good hands with somebody you can trust. But the purchase price and credits, a lot of times, for example, may go ahead and give them full asking price with the agreement that they're going to credit back a little bit of money to you towards your closing costs. And that really helps a lot of people out because most people don't have a lot of cash on hand when it comes to closing time. Do you see that a lot, Diana?
I do, you know, they're and seller credits, as you call them, are just a great another tool to use to be able to, make the deal work. And depending on the program, I mean, it can go all the way up to 6% of the purchase price.
That's right.
So if you're looking at 400,000, or let's say even a $300,000 property, so 6%, if I'm multiplying correctly, what is that, $18,000?
$18,000, yes. I mean, that's
Yeah.
a chunk of money by anybody's standards.
Yeah. I mean, that can sometimes take, if you're doing a FHA loan at 3.5%, where your down payment's going to be 12, three times, yeah, 12,500, and add your closing costs, you'd have very little to bring to the table just by using the seller credits.
Yeah, that's right. It's a great tool and something that can be negotiated into the contract. So what should somebody do right now? So we got to, this person watching this webinar right now, they're fired up. They might qualify, want to find out more. What should somebody do next?
I think they need to maybe run the annualcreditreport.com if they have any, if they're wondering if they have any questions about their credit. Um, you know, uh, that would be one thing. And then go to a lender. Go to a lender, one who's versed in down payment programs. Ask them to start to pre-qualify you to run a soft pull to see where you're at. So those, and then start looking forward. The things that we talked about. Do we have enough reserves to for the for what I need to do, and start thinking about planning.
That's right. And Diana, I'll put your contact information in the description so that people can get hold of you because you serve the entire state of Florida, right?
I do. I actually serve from Mississippi to Tennessee to Virginia and all the states in.
I had no idea. So that's the whole southeastern United
Yeah,
States that you can serve. So
I can.
that's good news. I can tell you that the expertise of the lender is the key to making a transaction work smoothly. I can't tell you how many times I've seen deals blow up because the lender wasn't the expert that they needed to be. And I know, Diana, of course, you and I wouldn't be talking if I didn't trust you and know about all your expertise.
I mean, I don't think any of us is perfect.
Oh, of course not.
But and and just keeping in mind that communication is so big, to keep the process going, and also remembering that, yeah, the process, the transaction is a journey. It's a process.
That's so true. I know that you really, bend over backwards and do everything you can. Now, does it cost anything to talk to you?
It doesn't. No, not at all. It
And
doesn't cost anything.
and I know you don't mind it. I can tell all the viewers in sincere honesty that Diana has a heart for helping and wants to help and wants to answer questions, just like I do, because we want to see people being successful in life, and we believe that owning your own home is the most important thing you can do to be successful. Do you agree
And I
with
can
that?
definitely appreciate that from you too, Chuck.
Yes.
That, yes, that you are the same.
Yeah, and that's why we're doing this here today. So, Diana, do you have any examples of somebody, a big success story that you can share with us?
Yes, I mean one of them, and this goes more to the fact of wanting to take a look at everybody's situation and making it work. And the one call that I mentioned earlier, and I would not recommend anybody trying to work with a 500 credit score, but the fact that this was a fireman. He wanted to purchase the house that he was living in from his father-in-law that he had a private loan on, and being able to refinance it and to just be able at five, to be able to make the loan work, at with his credit score. And I've had, the other gentleman too, that he was a first time home buyer. We actually had to work with the loan a bit, look at seller credits, and look at different ways that we could make the numbers work. And then for him to be able to come in and just bring a cashier check of $12 and 12 cents. Those are great. But yeah, having people that might have waited a couple years to get into their home, uh, a mother and her son finally found a place, and then using city of St. Petersburg down payment assistance funds, they finally came and closed. So those are some of the good success stories that I'm very proud of.
I love seeing that happen. And any final words for our viewer?
So I started on this a little bit, but it's just to remember that it is a journey, and it's a process. Just to believe in the end result, and the pieces will come together, because it is a journey and a process, and just to keep moving forward.
Very good. And my final word is the only way you're going to know is if you ask. And you can contact Diana or me. We'll tell you anything you want to know, and no strings attached. We just want to see people be successful. So just ask. You may be pleasantly surprised. And if you're on the fence, waiting isn't always wise, because the price of property always goes up over time. So thank you so much for watching. Thank you so much, Diana. I really appreciate all your expertise. I know this is going to help out a lot of people. So thank you again, and thank you for watching.